Hey folks, Dan Frio here with your opening bell for Fed Day, May 7th, 2025. So the topic of the day is going to be the Federal Reserve. And what's happening right now behind the scenes is mortgage applications are starting to surge. Well, is it because of the Fed? That's what we're going to talk about here soon. But wonder if the Fed cuts or wonder if the Fed doesn't cut. That's in our agenda for today. And then last but not least, I think the China trade is going to take center stage before the Federal Reserve. So let's tie all this stuff together and figure out what's going to go on with these things right over here. So my name is Dan Frio. I actually do this report 2 times a day to inform you guys what's going on with mortgage rates and mortgage programs. Because I'm a federally licensed loan officer, I work at a federal bank, and our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. How do we do that? I'll give you that information at the end of this video. So what I want to talk about today is the Fed Day, and a lot of people are anticipating some major moves with interest rates. So I think a lot of people are getting in position to either refinance or buy. We're seeing that surge here as well. But we pretty much know what the Federal Reserve is going to do today and maybe at the next meeting. So what is all the hype about right now? Well, if you really take a deep dive into it, it's not really the Federal Reserve and, are we going to go into recession or not? It's right over through here. It's what the Trump trade's going to do in regards to tariffs. Because inflation's coming down right now that we're seeing. And if China and all these tariffs become really inflationary, you're going to see interest rates rise and you're going to see the stock market crash. Well, maybe not crash, but it'll come down substantially. So the China trade's probably a bigger event than the Federal Reserve, but let's go over and anticipate if the Federal Reserve cuts today, what would happen? And most likely, if they don't cut today, when are they going to cut? So let's slide over to that for 1 second. We go over to the CME FedWatch tool, and it's basically right here. When we go through this, they're actually meeting in 4 hours. But we go down through here, and here's the anticipation of what they're going to do at the next meetings, well, basically throughout the end of 2026. So here's what we have right here. The Federal Reserve, there's a 95% chance they're not cutting rates today, folks, because the federal funds rate is right through here, 4.25, 4.5. Then we have in June, there's still a 70% chance that they're not going to do anything. So why now is everybody jockeying for a position with mortgage rates? Well, I can tell you why. Here's what we're seeing in the market right now. The market's loving the China trade right now. Everybody is in anticipation of, are we going to settle with China? Are we going to settle with China? Then that's going to be a catalyst to everything else. The markets will be able to figure out what's going on from here. The bond markets, all the markets are going to be able to figure out at that point, based on X amount of tariffs, all the analysts can put that into their models and then come out and say, okay, here's where we're expected to go with inflation on those tariffs alone. So then they can fill in a lot of these gaps. But here's what we're seeing: a nice little rally in the MBS market right now. This is a mortgage bond that trades on Wall Street that we focus in on every day. The only thing you have to know about this is the chart goes up, interest rates are coming down. So that's what we've been holding off to wait for a reversal of this trend. We thought we had it just the other day, and then all of a sudden we turned, and then this is what happened. So good thing I didn't lock. And if you watched last night's video, you're going to see why I didn't lock. These chartings keep showing us higher highs in these bonds. So we're holding off on our rate locks at this point. But today we're going to focus in on what the Federal Reserve is going to do and the whys behind it. So you go over here, and the Federal Reserve, they're basically at odds with the government right now. They're like, the government's saying the rates are too high, and the Federal Reserve is saying, well, we got to wait and see what tariffs are going to do. So right now, that's the dilemma that everybody has. So as the news about China comes out, that might ease some fear of where the inflation is going to take us, because that's the biggest reason why the Federal Reserve is not doing anything. Because we saw inflation coming down, but now they're saying, well, with these tariffs, inflation might just go right back up to where they were and even above. So I went to Yahoo Finance today and look at these things. These are a lot of things that we talk about on our channel. Do mortgage rates go down during a recession? Just did that recently. The dot plot, just did that recently. If you want to know average credit scores, I just posted a blog on my website. You can check that out. So we're kind of ahead of the curve of what Yahoo's doing. Maybe they're following me. Just kidding. So let's anticipate. Wonder if the Fed came in today and cut rates. Well, there's probably no chance of that. But if they came in, the markets would be like, what is going on? So it's not necessarily the markets would rally or crash. The markets would sit here and scratch their head and saying, what do you know that we don't know? So then what happens is, after the Federal Reserve decides what they're going to do and tells us, they come out and there's a public, basically a forum where the Federal Reserve chairman, he sits there and takes questions. happens, now that's when the market's going to move. And we'll have a live event this afternoon. Now, my systems don't give you the ability to hear what the Federal Reserve chairman is saying, so we're going to come out right after his conversations, and I'm going to show you exactly how the market reacted to it. I'm going to give you our feedback, and we'll see where interest rates go at that time. I'm expecting really nothing from the Federal Reserve, but they're going to come in and say what? And that's what we're anticipating. Are they going to be a little dovish, saying, well, we're going to be really on top of this, and if we see the jobs market starting to ease up, we might cut rates. If you hear that, the markets are going to be fantastic. If you hear them just come out and say, well, we're just going to wait for tariffs to finish up, and then we'll decide, the markets aren't going to like it. So it's going to be a lot of what Chairman Powell says. But then we flip-flop over to what if they don't cut rates? Well, that's what's expected. So the markets are just going to go back again and just focus in on what he's telling us for future guidance. And then we also had that dot plot last time that came in. You can see that right through here. The dot plot anticipated 2 to 3 rate cuts, and this was from the Federal Reserve. So the Federal Reserve came out at the last meeting and presented us with what we call the dot plot. It had that most of the members had 2 to 3 rate cuts in the cards for 2025. So we're also going to focus in on that because they're going to ask him questions about the dot plot as well, and he'll say, well, here's our anticipation of what's what. So the event today is going to be really non-eventful when they come out and actually tell us what they did. But the big event is what they're going to come out and tell us what they're anticipating to do. So that's what the markets are waiting for right now. And again, on top of what the China trade's going to look like. And so a lot of these tariffs are also playing a big role in a lot of these things. So right now we have the bond market up 8 ticks. That's really not going to do much to mortgage rates. Yesterday we saw mortgage rates ease just a little bit. Everybody's just anticipating what the Federal Reserve's going to do today. So we went over 2 analyses. One if they don't cut and one if they do cut. What they're going to do is they're not going to cut. My anticipation is going to be they're going to come in and they're going to say, okay, we're going to monitor this really well, and we're going to monitor the jobs market because the jobs market is what's going to really tell us what's happening in the economy. So that's where you're really going to focus in on there. So that is my report for today. Guys, if you want to learn more about credit and credit scores, visit this site, creditscoresandmore.com. I just thought I'd mention it. If you need a free credit system that you just want to monitor and really not have to pay for anything, check out that system right there. You'll thank me. But let's go back to who I am and what I do. My name is Dan Frio, and I'm actually a federally licensed loan officer. I work at a federal bank. That means I'm licensed in all 50 states as well as Puerto Rico. Here's the unique thing. We have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, we're set up, my bank is set up with 33 other lenders, and they're adding lenders at this time. Why? To help you guys out. Because the question that everybody asks me is, Dan, how do I get the lowest rate in the market? Well, we're trying our due diligence, and we're trying our darndest to help you guys out. So we're setting up banks in the background. So when you apply at our website right through here, we're not only going to put your application in here and monitor rates with our bank, we have 33 other lenders that we're going to watch and monitor for you guys. So when you're putting in an application here, think about it. It's like getting quotes from 33 lenders. So you can put in your application right above my head. You can schedule a consultation right through here, or you can even give us a phone call at 844-775-5626, or look down below. We're adding YouTube videos weekly right now. If you're a homeowner and you want to put in your information, if you want me to monitor your rates for you, let's say you closed 2 years ago and you're at 7.75 and you're like, Dan, when it gets to 6.75 or 6.5, I want to refinance. You can put in your information right there and I'll call you as soon as the rate hits exactly where you want it to be. If you're looking to buy a house, got to check out this video. Disabled vet, right through here. We have fantastic programs for you. If you want to learn more about these, check out my YouTube channel as well. There's over 3,000 videos to help you understand real estate. So thanks for watching, folks. I'll be back here at the live event for the Federal Reserve. We're going to show you how the markets react right after the Federal Reserve's announcement and right during the press conference. So thanks for watching, folks. I hope you learned something today. Join us live. You can see the market reactions, exactly what's going on. If you want to prepare for this and you want to check and see, get ready. If their rates do come down, please check out this. Put in your application if you're looking to refinance. See you at 3 o'clock Central Time. Take care, folks. Thanks for watching.